Hello, everybody, and welcome to the View from the Top. I'm not sure that you expected to see me here, but I'm taking over for Brian, who unfortunately had a family emergency and had to leave us and leave me here. So thank you, Brian, for that. And it's the very first time for me. And I would need your support. So I would really need your support. So I already see people coming from all over the world. Oh, Ferzin, you're so sweet. It's really great to see all of you. So Ferzin is here, and Phyllis and Holian. Please continue sending your comments. They're so helpful. I need that. It's my first time on screen. I'm going to try to carry this show as good as Brian. I'm sure I'm not going to be as good as him, but at least try to carry it on. But I will need your support. So please share your comments, share your, as Brian says, hit the heart button, hit the like button, and let me know that you're here. Hi, Harvir. It's so good to see all of you. So let's start. Let's start with the show. We're going to talk today about a topic that is new for me, as I believe for other people here also. And this is home sale in the US. I myself lived before in the US, but I've never sold or bought a house there. And so I'm really happy that I'm going to be joined by my colleagues, Heather McCartney and Cara Butler from Benivo, to help me figure out this topic. So if you guys have any question about this topic, you can already share them in the comments, and I'm sure I'm going to hit Heather and Cara with it. So this is our topic for this week. But what's going to happen here next week? Next week, we're going to have Diogo Matos with us from Solvay. And he's a very dear change maker and friend of Benivo. And he's going to tell us about the organizational transformation that they had at Solvay. And it's a really, really interesting story. And of course, with the focus on how global mobility fitted into all of that. So that's next week. But this week, as always, you can watch us here live, and you can also watch us on YouTube, and you can also listen to us. So if you somehow missed this show, you can find us on Spotify, and my good colleague Michelle is now taking my place as a producer, and she's going to share the link for Spotify, so you can listen to us while you're jogging, while you're in the gym. So that's another option to find us. And for all of you who are looking for your CPE and for your codes, for continuing education codes, I'm going to post them right here. And this is a chance to thank our very, very good friends from Rocket Mortgage, Lisa from Rocket Mortgage, and Robin from ERC, who are helping me every week get these codes to you. And this is not an easy task. They're really helping me with that. So thank you, Lisa. Thank you, Robin. And before we move to the big topics of this week, first, we would like to see what was going on in the world of global mobility in the last week. So who got new jobs and what kind of positions are waiting for you, job seekers? So let's run the video and see what are global mobility's breaking news. Congratulations to everyone who got new jobs. I actually spotted there Darby Long, who's one of our change makers. And so congratulations, Darby. That's a wonderful achievement. And if you have any news to share with us, please let us know. Please send me a message. Please let me know, and we'll share it in the breaking news segment. And if you have any open positions, you know, some of the brightest people of global mobility, maybe the brightest people of global mobility are watching this show. So this is the place to find your new hires. So if you have any open positions, write to me and we put them on the breaking news part of this show. But if we're talking on the best of the brightest, who else should we go move to other than our immigration guru? And what are we going to hear from Julia today? I think she's going to talk about Latin America, but let's bring it to the stage and check with her. So as Brian says, hit the heart button, hit the like button, and share the love to Julia Onslow Cole.
Hi.
Hi, Julia. So good
How are
to
you?
see you. I'm good. I'm good. I think I'm doing fine so far.
You're doing brilliantly. Brilliantly. Yeah.
Thank you
Poor
so much.
Brian, he'll be out of a job. He'll be out of a job.
No, I'm sure you won't be. I'm sure you won't be. So, Julia, I think you entered home just 9 minutes ago.
hmm
Is that right?
Yes. Yes,
Oh
I
my
did.
God.
Yes.
Thank you
Yeah.
so much. What would you have done
I often
without you?
do. Yes.
So, where did
So,
you come
yeah,
back from?
I just came back from Costa Rica, literally about 9 minutes ago. Yeah. And I'm just going to talk about just a bit more about LATAM. I did last week. I talked about Costa Rica. And I just want to give a big shout out to Laura Weingart because she's our head of knowledge for the whole region. She's absolutely fantastic. So obviously the US administration is really focusing on stricter immigration controls and also increasing trade tariffs. And that's going to really shape the economic and diplomatic relationships that we see across the whole region. And in Mexico, the mass deportation of undocumented migrants from the US could really create significant labor market disruptions for Mexico. We believe there's over 4 million undocumented Mexican immigrants in the US, and reintegrating them all could really increase unemployment and put a bit of a strain on the economy. And additionally, of course, all the remittances that come back to Mexico from those migrants who are working in the US, they're a crucial source of income for Mexico. And that could also have an impact on economic stability in Mexico. So on the trade front, we know that 25% tariffs on Mexican exports have been threatened. And given the fact that 80% of all of Mexico's exports go to the US, this too could impact economic growth. But, on the positive side, Mexico's been taking very proactive steps. The government recently deployed 10,000 National Guard troops to the northern border in exchange for delaying tariffs. And also, Mexico's business visa system remains really efficient, and it's a very attractive destination for companies that are seeking to relocate, particularly because there's quite restrictive policies elsewhere. And since the transition to the new administration last year, Claudia Sheinbaum came in, the National Migration Institute has really maintained these standard processing times. It's very impressive. And also there's generally very favorable eligibility criteria. At the same time, if you're operating in Mexico, you've got to be very compliant, because we've seen the government really reinforce compliance measures, and there's been a real uptick in on-site visits to verify companies and their documentation. So we're monitoring this very closely, because One thing that may happen is that Mexico may have to reallocate their resources to manage the irregular migration, and that could cause delays. So if they shift their offices and their staff to the north, this will be very relevant for everyone that's enjoying these really good processing times at the moment. The other thing to say is that the US and China really have, Latin America sort of caught in the middle, because China's really expanding its presence, but at the same time, the US are looking at raising tariffs on China, and that could force countries in Latin America to reduce their ties with China. And that, it's very difficult economic and also diplomatic decision. And we've seen this sort of play out, this US-China tension, we've seen this play out in relation to the Panama Canal. Now, at a regional level, Latin America is strengthening its inter-regional trade to mitigate risks. So interregionally, we've seen Panama, they've joined the Mercosur as an associate member. So that's the first time we've seen a country from that part of Latin America join, and that's important. And also, you'll recall that when I've been giving these US administration updates, I've been saying how Europe had been really tightening their relationships with Latin America. We saw Europe have a deal with Mercosur, but we've also seen a separate one with Mexico. And beyond this geopolitical picture I'm trying to paint for you, also, there has been some really impressive things done at different government levels, trying to really improve growth by looking at immigration. So Brazil has got this new residence permit, and it allows foreign graduates of Brazilian universities with a job offer to live and work in Brazil for 2 years. So it's the first in the class in the region. It's a really progressive step. And, the government is also looking at giving particular permits for those who are investing in Brazil's green economy sectors. So very, very positive. And last week, when I was in Costa Rica and I was giving you an update, I said there's also a bill going through in Costa Rica, which Fragment are involved in, and permits are also supporting amendments to it to allow dependents to work. So this is another thing that we're telling all really countries, put that in, because that's also will really help you move talent, attract talent to those countries. Chile, Peru, Brazil, we've got slight delays in issuing identity documents for foreign workers, and this can impact start dates. So one tip is really start those applications for assignments in the region as soon as possible. And then the last I wanted to say is that several countries, for example, Colombia, Guatemala, Mexico, they have annual registration requirements for companies that sponsor foreign nationals. So in Colombia, companies have to renew their commercial registration by the end of this month, and they have to have this updated document, otherwise they can't submit visa applications. And in Mexico, the corporate registration certificate has to be done by the 30th of April, or you risk losing the ability to sponsor foreign workers. So really another important point, if you're looking at this region, make sure you're abiding by those deadlines. So, in summary, I'd say there's a lot of challenges, but also a huge amount of opportunity. I must say, I've really had a fantastic time in Costa Rica with the team there, and across, previously in Mexico.
It's such a beautiful
amazing
region.
place. Amazing region, yes. Amazing place, and really lots of opportunity. With every challenge, there's an opportunity.
So challenges, but great opportunities. Yes, definitely. Wow, Julia, that was so interesting. And actually, we're not going to move too far, because next we're going to have changemaker Marife Alvarez with us. And she's originally from Venezuela. So she does live in Houston now, but we're kind of staying in the same area. So thank you so much, Julia. That was so informative.
Thank you, Tally.
And My God, 9 minutes ago, 10 minutes ago, you just entered home. Go, go unpack your suitcases. And thank you so much. But please stay with us until the end so we can see you
I will.
and say our goodbyes. So thank you, Julia. And everyone, you know the Brian way. Hit the heart button, hit the like button, and give your love to Julia Onslow Cole. And welcome, Marife Alvarez. Marife, so good to
Hey.
see you. Thank you for joining me. It's great
Thank you
to
for
have you on
having
the show.
me.
Oh, yes, yes, whenever you want. This is your place. Thank you so much. Marife, you're a change maker and a very dear change maker to my heart. And I wanted to ask you, you know, what I always ask people, how did you end up in global mobility?
Oh, wow. I started in global mobility initially in Venezuela many, many years ago. And with my former employer, they then brought me here to Houston, United States, and I continue growing on my career in the global mobility world. And then recently, I joined one ocean offshore business here in Houston. So I has been for a while, more than 15 years in the global mobility area.
Wow, that's a lot. And you're an expat yourself, so you know the
I
experience.
so I wasn't an expat, but yes, I relocated. The company did move me as a permanent international relocation. Yes. So I do know
Yeah.
the drill, which helped me
Oh,
when I'm
yes.
talking to my expats about it.
Yes, so we're going to bring you back when we talk about expats or relocatee turning global mobility, because I think that's a big thing, and we see it with so many of our global mobility people.
Mm-hmm.
So Marifa, tell me a little bit about Hanwha. What is Hanwha doing?
So Hamway is a huge corporation in South Korea, and here in Houston, we start operations last year to open the offshore business. So I'm the global mobility manager for the offshore business. Right now, it's a small program. We have offices in Netherlands, in the US, and soon we will be also opening operations in Brazil and Singapore and other countries. But right
This is
now we are
very
managing
exciting.
I'm managing the program for the offshore business.
Yeah, yeah. This sounds really exciting. It sounds like a time of change. And
It
within
is.
all this change, you chose to join the change makers. So
Yes.
what brought you to join the change makers?
Yes. So my dear friend Cara invited
Who we
me
are
to
gonna
join.
meet soon.
Yes. So she invited me last year to join the change makers. And when she was explaining me what was all about, I got really very excited because I see that a way to help the community to get global mobility experience and relations with other mobility uh, managers and executives, but also the opportunity to, through my time and dedication, help a foundation. So that's awesome for me.
Yeah, that's true. Because as a thank you to your participation, we are donating to any charity that you choose. And the
Hmm.
one you chose is
Yes,
Wellness for Growth. So there's a
yes.
special connection there, right?
Yes, it is. So, Wellness for Grow is a foundation that was established here in Houston in 2012. And the main intent of this foundation is to help Hispanic women. As you mentioned at the beginning of the show, I'm originally from Venezuela, so it's very um, good and very rewarding for me to, through my time and collaboration, be supportive of a foundation that help Hispanic women. So this foundation has been helping over 1,000 women in here in Houston through their platform of webinar, online classes, community workshops. So it helped not only the Latin women, but it also helped their families.
And you don't just support, you do more to support, right? Maybe I should share this one.
Yes, yes. So I'm a runner, and one of the activities that this foundation used to have was a 5K, and I was supporting also the foundation through running the 5K. So in the picture, you can see me a few years ago with my two kids running our 5K, supporting Wellness for Growth.
Amazing, amazing. Well, Marifa, so keep up the good work, keep on running. And we're going to move now to my colleague Cara, who's going to tell us a little bit about what's happening in Benivo. And actually, one of the things that she's going to talk about is our meeting. So I'm really looking forward to see you in a quarterly meeting of the Changemakers very
Yes.
soon. And thank you so much for joining us and for being a change maker. Thanks a lot, Marifa. And
No, thank
now,
you.
yeah, we're going to move to Cara.
Hey, Tally.
Hey, Cara, good to see you.
You're a star.
Oh,
you're amazing. Doing great.
Thank you so much. My heart is pounding, but I'm okay. Okay, Cara, quickly, because we have so much to talk about. So tell me, what's happening in Benivo?
Right. Yes, we've got great things happening. One of them, the first one you just mentioned, which is our quarterly Changemakers call, which is happening next Thursday on March the 27th. And we're going to have it in 2 time zones. So everyone can join, one in the APAC region and one in the Pacific time zone. So we're really looking forward to
anyone, we sent the invitations. And if anyone is watching us now and did not receive the invitation, let me know. We're looking forward to seeing you. It's going to be really, really interesting. What else?
And then next on the agenda is our VIP webinar. That's coming up. Our own Beth Nelson is going to be talking about how to transform your global mobility program and really discuss our VIP options and that. And that's going to happen on March the 25th at 11 a.m. Eastern time for corporate attendees. So we're looking forward to that too.
Excellent. Yeah. So again, if you want to join, you can still write to us and click the link that Michelle shared and join us there. So Cara, you're not going anywhere. You're staying with me, and we're going to call Heather McCartney to join us and talk about the main topic of this show, home sale in the US. Heather, come in.
Hi, Tally. Thanks for having me.
Hello, ladies. Hi, Heather. Hi, Cara. So good to see you. Okay, so first, I think everyone knows Cara, but I think it's the first time that you're with us, Heather. So maybe you'd like to start by introducing yourself.
Hi, I'm Heather McCartney. I am a client success manager here at Benivo, and I've been working in the global mobility industry for a little over 10 years. And I started out working in home sale as a home sale consultant. So most of my career has been working with home sale in the U.S.
Amazing, amazing. And Cara, to anyone who, I can't believe anyone didn't meet you yet, but still, let us please introduce yourself.
Yeah, so Cara Butler, I'm Client Development Manager for Benivo and based in Houston, based in the U.S. So I have a lot of conversations about the U.S. home sale program. It comes up quite often in my discussions with people. And I originally started my career in global mobility on the real estate side at a national title services division. So I've been through a lot of the home sale processes as well.
Plenty of experience here. Don't include me because I have no experience in this area. But still, people, if you are here and you're listening and you have questions, ask them. Send us your comments, and we're going to hit Cara and Heather with your questions. But maybe I should start with the question. And because I used to live in the US, I now live in Europe. And in Europe, you just pack your stuff, you rent your house, and you move. What's the big deal? Why is it so different in the US?
Yeah, it's a lot different for those of you outside of the US. It's, many countries, as you just said, Tali, where relocating employees typically rent, and then they rent when they get to the new location. So there's not that home sale piece involved. In the US, about 65% of people living within the US are homeowners. And that's because most people, there's a pattern kind of driven by widespread homeownership here in the US, even though we are starting to see it shift a bit with more renters. Again, but there still is a large homeownership rate in the US. But anyway, the reason really is driven by kind of a couple of set of factors, a combination of historical incentives for homeownership in the US and also cultural factors. There's been very favorable tax policies to encourage homeownership, like the mortgage interest rate deduction, capital gains, kind of exclusions on the sale of a permanent residence. So it's really, we've done things within the US to encourage homeownership. So it's a very common step in the relocation process here, more than it would be elsewhere. And also, and to support, yeah, go ahead.
No, continue.
Well, and to support moving employees or employees that are moving for work, many companies offer structured home sale programs. So it is a big piece of the industry. They're trying to relieve some of the burdens and the stress of making that move. And however, though, these programs carry a lot of financial risk. So there's a microscope on them many times. And so there's really a need to create a balance between employee support and fiscal responsibility.
Yeah, we're going to go into these programs because I want to understand them more in details. But why are we talking about it now? I think I understood that there's kind of a shift in the US market that makes it more relevant now.
Yeah, the real estate industry and the market within the US has really been kind of in a state of flux for several years. And there's a lot of reasons for that, but some of the impact that we're seeing is high interest rates, first of all, high compared to past years. I mean, I remember when rates were 18% at one point when I first started, but they're hovering at about right around 7% at the moment. That is considered high for a lot of people, especially when, we have homeowners now that have very good interest rates at like 3 and 4%. So this is really making it hard for, making the decision to move. They don't want to lose those good interest rates and then be in a position where they're purchasing at a higher rate. So that's really kind of creating a market where there's a shrinking pool of homes that are for sale. So it's the housing inventory is constrained. There's also rising home prices and economic uncertainty that are adding pressure. So when you have all that kind of going on at the same time, it really creates some challenges for both buyers and sellers. So yeah.
So you definitely need a good program in place. And I have to maybe because I'm not in the US, I wasn't really familiar with Benivo's home sale solution until we started preparing for this show. But then when I talked to you, Heather, I found a really solid program. And maybe you can tell me a bit about it before we continue to dive into the whole home sale topic.
Yeah, so Benivo is always focused on transparency, cost control, and efficiency and mobility. And our home sale program is the same. So we're acting as a subject matter experts, and we'll help our clients in providing structured high-touch support for the evolving real estate landscape. So we use expert partners who are able to deliver home sale according to the parameters in which the home sale program has been developed with our client. And our vendors are able to provide meaningful experience and expertise expertise in the field, and they've all been vetted by Benivo, so they're trusted partners that know exactly what they're doing. And the efficiency really comes in from the transparency that Benivo has. All of the home sale details are right on our platform, and it's updated with real-time data. So the client's always knowing exactly where they are within the home sale program. Our biggest differentiator is that transparency and that client-centric design on our platform. So all of the information about all the ongoing home sales within their program are right there at their fingertips.
So if I understand what you're saying is that basically we have our experts, we can do everything, but we also have the transparency, and this really helps. You know, we always go back to this seat at the table and the ability of global mobility to be strategic and to be always on top of everything, to know exactly what's happening. So this is basically when you have all the data in front of you, everything, you know, everything that is happening. You don't need to give a call to your consultant to check. Everything is right there. But we'll go back to that. I still need to understand, why are we even talking about this here? I mean, this is a global mobility show, and how is home sale really such a big part in global mobility?
Well, home sale is probably the most expensive transaction that most people will do in their lifetime. So it leads to a lot of high stress. And delays in a home sale may impact the employee's productivity and their ability to relocate successfully. So ideally, you want your employee to relocate quickly, be able to focus on their new position, so that they're not stressing out about selling their home. And so a managed home sale program really eliminates a lot of that uncertainty and provides marketing and home preparation support. And then we're also able to assist with negotiations and transaction coordination, so that the employee is able to secure housing quickly in the destination location and be able to start their job and focus on that new position instead of worrying about selling their home back at home.
I think you had a good story about one of these incidents you told me before.
Yeah, so I had a client many years ago who was relocating their CFO, and it was a new hire. They needed their CFO to get on the ground really quickly. And, you know, those high-level employees tend to have really expensive homes. So they had a $4 million home that was overlooking the ocean. And the client was able to quickly get an appraised value, offer that guaranteed buyout to that employee so that they could take their equity, go purchase a new home and destination, and they were able to get on the ground running and start their new position and really have an impact on the company. And that's really important, especially with those high-level employees.
I think that's the idea. That's what we're looking for. And we have a comment here from dear Ferzin. And Ferzin is saying, home sales in the US, particularly in Silicon Valley, is its own bubble. Multiple offers on a single property and final sale for far exceeding the list price. Buying is complex with average sales around 1.2 to 1.3 million. Wow. Yeah. Okay. Do you want to relate to that?
Yeah, I mean, he's absolutely right. And we see, and that one of the challenges again is that the whole country, of course, we're all states and everyone has their local and you know, things going on where you have hot spots in some areas, and then you have other areas where is a very slow sales cycle. So it makes it even more critical to have a really transparent and a really good structured home sale program for that.
And Benivo offers regional support. So we work with real estate agents that are familiar with the location your employees are relocating from. So they're able to take all of those factors into account when providing guidance and marketing support.
Yep, exactly.
And now Jenny is asking, and actually it takes us to our next topic. And hi, Jenny, and thank you so much for staying up so late. Jenny is in Australia, and I'm always admiring her when she's on during the show. So Jenny is asking, do most corporates offer the same level of home sales support, or does it vary greatly across industries and the size of the corporates, etc.? So yeah, a little bit about these. This was actually my question. Are all home sale programs created the same?
No, all home sale programs are different. And it often depends on the industry. So there's a lot of different home sale programs that a client can use, and they can actually offer multiple programs within their mobility program. So the lowest tier program for home sale is marketing assistance, and it's exactly what it sounds like. It's that regional real estate agent support who's able to help the employee market their home to sell it more quickly. And this is typically reserved for like entry-level employees.
So they're just posting it, helping them post it in the local board or whatever.
Yep, they'll list the property, but they'll also be able to provide that marketing assistance with recommendations on how to best market the home to sell it as quickly as possible. And that extra level of marketing assistance is important.
And that's the lowest. That's the first year.
Yeah.
Okay.
It doesn't
and then
typically include any financial support, so no closing cost reimbursements.
Okay. So then next.
So next would be direct reimbursement, which is marketing assistant plus the reimbursement of closing costs. So this program is also typically for lower level employees because there is the tax burden of the reimbursement of the closing costs. The reimbursement is considered taxable income to the employee. So
can you explain just a minute? I think I don't want to use lingo because we have people from outside of the US. So just maybe explain that again.
Yeah, so it's taxed as income. So just like your pay, that reimbursement would be taxed as income. And it's oftentimes taxed as like a bonus. So the tax can be quite high, 30, 40%. And so those taxes the employee would have to pay. So if they get $20,000 reimbursed for closing costs, 40% of that going to taxes is a substantial amount. And a lot of times the client comes in and pays those taxes for them to help cover those costs, but sometimes they don't. And so that's also an added cost for the client or the employee in that direct reimbursement program.
Okay, and then the next tier?
So the next tier is the buyer value option or the BVO program. This is not considered taxable income to the employee. And essentially the way it works is that the company contracts to buy the home from the employee once they find a buyer. So a buyer comes in and says, we'll buy the home for X amount of dollars. And then the company will purchase that home from their employee for that amount and then sell it to the outside buyer. And in doing that, it is considered a business expense for the company and not taxable income to the employee. So they get that $20,000 tax-free and it's not added to their income at the end of the year. They're not paying any taxes on it. And then the client doesn't have to pay any tax on that. But there's that added risk of the client buying the home. So there's always that risk that maybe the sale would fall through and they have to carry the home ownership costs for a while until they sell to that outside buyer.
Okay, that makes sense. Sorry, Cara, you were saying?
Oh, so there is a risk in that.
Yeah. I think this is what I feel, that we're moving from low risk to high risk.
Exactly.
So what is the highest?
The higher the risk, the more likely you're going to have executives getting that program. So the highest risk program is the guaranteed buyout or the GBO. Sometimes it's called the appraised value option. But the guaranteed buyout option or appraised value is the top tier. And it's typically reserved for higher level employees like C-suite employees or VIPs. And the way it works is that the company will guarantee they'll buy the home from the employee after a specific marketing period, usually 30, 60, 90 days. The employee will market their home. And if they don't have a buyer, the company will guarantee they'll buy the home from them. And they set the value by getting appraisals done. And then they'll give the employee an offer to purchase the home at that appraised value. And then if the employee decides to take that offer, they can get their equity and then go purchase a home in destination. And the client would just carry the home until a buyer is secured and they're able to sell to that outside buyer.
That sounds like a huge risk, especially you mentioned before, it could be C-suite. So these people would have really high value houses.
It is a really high risk transaction, but the risk really is only in a slow market. So as I think Farazine mentioned earlier, in really fast markets where there's a lot of offers coming in, the risk is pretty minimal because you typically have more offers on the home than you can choose from. So those homes tend to sell really quickly. But when you have a slow market, it can be a substantial cost, well, because the client would have to carry those home ownership costs month after month until they find a buyer.
And that's really why, Tally, it's so important to make sure that your appraisal process and that you really are confident in that, and that there's a lot of transparency into that appraisal process and that selection, and that you have a lot of confidence in that process.
Yes, exactly.
So how would the company decide what choice, what kind of program they would want to run with?
Well, really, they just want to balance the employee's experience with the financial and compliancy considerations. So there's a lot of market risk they need to consider, tax regulations, and then they also need to consider the equity payments. Whenever they buy for the home from the employee, they pay the employee their equity in the home so they can go purchase a home and destination. So that can mean that it'll be several weeks that they're paying out tens, if not hundreds of thousands of dollars to the employee and waiting for that sale to recoup those funds. So the critical role is making sure that they're adhering to the IRS's rules for tax compliance for a guaranteed buyout or a buyer value option. And then they're aligning with the job levels associated with that. So a lot of times you'll see different home sale programs depending on the job levels.
Yeah, so you mentioned that the different tier go with the different levels. So maybe the lower tiers would go with the lower levels, and then the VIPs would get the higher risk
Exactly.
programs. That's really interesting. Thank you, Jenny. I'm so happy that you're here with us. So, Cara, so can you tell me, how does Benivo solution fit into this landscape?
Yes, so our solution is a structure. We provide a structured home sale solution that aligns with industry best practices. So we are providing support for offering, home sale management solutions that are designed to exceed the top relocation industry standards by streamlining the process, as Heather discussed, providing a lot of visibility into the process and transparency, that everybody knows what's going on every step of the way. And above all, it's a much more transparent approach, again, with detailed milestones to see where everything is in the process. And the result of that is a support system that really keeps cost efficiency and compliance in mind. That's the top issues there. And so with Benivo, you're going to get expert guidance tailored to your needs, to the employee's needs, with really precision all along the way, from valuation to closing the transaction. And this balance between the two is, minimizes the stress for you, for the company, and particularly for the employee themselves. So, and helps reduce the financial risk as well.
Yeah. Okay, and we're actually getting quite a few questions from the audience. So Ferzin is asking, if an employee does not want to sell immediately, is there an option to help them rent their home for a year or two as well, especially in slow markets?
That really depends on the client, what they're willing to offer. Usually the client's only going to offer home sale benefits or home purchase benefits or rental benefits. So they usually don't offer both home purchase and rental benefits. So the employee can opt to rent a home for a while and wait to sell their home in origin for a while. But ultimately it's up to the particular client whether they're going to extend benefits to allow the employee to rent before selling. It is pretty common that the employee will rent for a while before purchasing. But usually the employee wants to use those home purchase benefits so that they can get some of their closing costs covered when they purchase a home at destination.
Okay. And another question comes from Liesel. Are you seeing any clients offer home sale incentives or loss on sale support?
Yeah, there's been a lot of discussion. And I think when we were talking about the challenges about the market themselves, there's been a lot of, going back to where times were kind of tough in that market before, where there was a lot of these benefits within the policy where they offered a loss on sale, or they helped pay mortgage points or something like that along the way. We're starting to see those conversations come back, and should those benefits or should those points be offered again? And so yes, that is the case. And there's a lot of talk and a lot of need for creativity too, because maybe we need to think outside the box to find solutions that we haven't done before. So that's a conversation that's being had as well.
With the changes, yes. Okay, and one more question comes from Ali. Have you had any examples where a company purchases a property from the assignee and then utilizes the property for long-term accommodation solutions for assignees moving inbound to that location?
I think that's a really creative idea.
Talking about creative, yeah.
I've never had a client do that, but I think that's a really creative idea, especially if you're relocating an employee from one of your big corporate headquarters to another one. That would be really a smart idea.
And I've actually had that discussion with a client not long ago where they, Ireland is typically a very difficult place to find housing. And so they actually purchased some properties there, a couple of homes, and they're using those homes for short-term assignments and they're just reusing them. So that is an example of a creative approach to it. Kudos.
That's interesting. We just mentioned creativity, and Ali, you came with this, so thank you very much. And yeah, that could be a direction. Another question that comes in is from Holian, who's asking, what is the average time that companies are offering temporary accommodation at destination before employees have to purchase a new home? You touched a little bit about it, Heather.
Yeah, I mean, it depends on the employee's level. So usually the highest level get more temporary housing, usually 90 days or more, where the lower levels get 30 or 60 days. I would say on average, 60 days is what I see most often. But it also depends on the housing market and how long the employee anticipates they'll need to be searching for a home to purchase. As we talked about, there's sometimes multiple offers on homes. So temporary housing I've seen be extended a lot because of those markets.
Interesting. Cara, I wanted to go back to you and to ask you from your experience, tell me, in your opinion, what makes a home sale program successful?
I think that there are probably maybe 4 pillars, so to speak, of what a program can do to make sure that it is a successful program. One of them is accuracy. I think going back to the importance of the appraisal, that piece, but accuracy in pricing, reliable and accurate appraisals, making sure that there's strict compliance with tax and legal ramifications, but that your process is financially sound and legally solid. I think too, the second pillar would be quality. So a structured, very high touch process that keeps the transaction smooth and in line will minimize the hiccups from start to finish. And hand-holding, that's one of the things we've talked about a lot, and that's a very important piece to this particular process. But making sure that the employees don't kind of weave outside of the policy guidelines to where we're getting them off track and maybe making them ineligible for a specific property or specific program because they haven't adhered to those guidelines from the start. So making sure that they know what they are and that they're staying in the lane, and then we're helping them, learn about the policy, what the benefits are, and all of that. Also, I think local expertise, as Heather was mentioning earlier, it's not possible in the U.S. to know every single legal ramification or tax within all of the different states and jurisdictions within the U.S. So being able to have really good partners on the ground that you can utilize to get that information and to be able to share and disseminate that with everyone is very important.
Yeah.
So Heather, are we doing that?
Yeah, we are. I mean, I think that's what's great about the Benivo solution is that we are able to provide expert guidance at every stage for both the client and the employee. So we are able to provide assistance with developing their program, but we also provide a single point of contact for the employee who's able to get that high touch support they need to make sure, to Cara's point, that they're aligning with the way the program is supposed to operate so they're not risking their eligibility, but that we're also making sure to hold their hand throughout the process because it can be complicated. We're also
very emotional.
That is very true. It is very emotional. A lot of people are selling their homes they've lived in for a long time. So we make sure that we have that local expertise to provide additional guidance on what we might not know about on the ground in that particular county or state. And then we have structure compliance to ensure that every transaction is following the client's program, but also the IRS rulings to avoid any unnecessary taxation. And then we're really focused on accuracy and compliance to make sure that we're able to track everything for the client for reporting purposes, but also for cost tracking purposes.
Exactly.
Yeah, that's really interesting. And by the way, I think it's a good time to mention that Russ from our advisory board is now conducting a big survey about home sale, and we're going to publish his results. And he's talking to many global mobility representatives from different companies, and he's going to come up with a summary of the trends in the market. And I think that's going to be really interesting to hear what companies are doing in light of all of the changes. And one of the changes that I know that he mentioned, and you mentioned earlier when we discussed the home sale changes and things that are happening, you and him also mentioned the NAR settlements. And again, I'm not from the US, so enlighten me. What exactly does the NAR settlement mean? And is it another challenge that we're adding now?
Yeah, so I did want to mention, Russ asked me to mention that they have that survey open until March 26th. So if there are any clients that are interested in participating, please reach out to Benivo. We would always love to hear what you have to say. But in
and
regards
the first clients that are going to join this, the ones that are going to be on the survey are going to get the results first. So they're going to have the first, they're going to be able to read the report the first. So yeah, definitely let us know if you want to join. But yeah, tell me about the NAR settlement.
Yeah, so the NAR settlement, NAR stands for the National Association of Realtors, which is the largest trade union in the United States for real estate agents. And that settlement essentially changed how real estate agent commissions are going to be handled. So essentially, previously, there was a cooperative compensation rule that essentially meant that the selling real estate agent would collect usually around 6% commission and share that commission with the buyer's agent. That's no longer a requirement. So what that does is open up a lot of uncertainty and it allows for negotiation. So an employee who is, or a person who's selling their home is able to negotiate what the commission they're paying. And sometimes they might say, we're not going to pay the buyer's commission. So if they're not going to pay the buyer's commission, who does? Most likely the buyer. So that's also changing the way buyer's agents are working. Previously, you could work with a buyer's agent, not have to sign any contract because they were guaranteed to be paid by the seller's agent. But now they're entering into buyer's contract where they're promising to pay a certain commission if the seller's agent isn't willing to do so. So it's shifting that commission cost to the buyer when it was previously paid by the seller.
Okay, and how is it going to affect the relocating employees?
So it affects the relocating employees because it affects the global mobility program, where you might sell your home and pay that full 6% with half of it going to that buyer's agent. But then you go to buy a home and now that seller's agent isn't willing to pay your buyer's agent. So now you have to pay buyer's commission on the home purchase as well. It increases the cost for the employee, and the client now has to decide, are they going to cover an additional commission for the employee on their home purchase if they've already paid out commission for their home sale? And so there's a lot of conversations being had in the global mobility industry about how programs are going to be adjusted to accommodate that. Luckily, we haven't seen a lot of impact in the overall real estate industry based on the NAR settlement, but I anticipate probably will in the coming years. And then global mobility companies may have to adjust the way their home sale programs are working.
Yeah. It takes a long time
I think
for change to happen here.
Yes.
So yes, Cara, are there any special considerations you think that mobility teams should be making with that in mind?
I think Russ said when he was conducting some of his interviews that he's had maybe just a couple of companies that have said that they've changed or amended their policies to accommodate the buyer having to pay that commission. And just to give an idea of how much that could be, commission is generally 6% of the sales price. And typically it's been split between 3% to the buyer's agent, 3% to the seller's agent. So if a buyer buying a home now, where traditionally the seller was paying that commission, now he's responsible for up to 3% of that sales price, could add that's a huge layer on top of what they're already paying for closing costs and the sales price and all of that. So I think, we have, again, Heather said we've not seen a lot of impact so far, but I think it could be, as it gets more familiar in the industry, it could be a disruptor, and it could really affect the way that those commissions are being paid and who's paying them. So it's still to be determined.
So meaning that employees would, in a way, expect the companies to support them in paying that,
I think
share these costs. So that would be another cost for the company to share.
Or they'll have to make that decision if that's something that they want to do. Yes, at some point.
Mm-hmm. Mm-hmm. And are we in Benivo, Heather, are we helping them with these considerations? Is there a way for us to help?
Yeah, I mean, that's one of the reasons we started the U.S. home sale benchmarking survey at the beginning of this year, to account for how programs are changing after the NAR settlement. And our client advisory team has also offered their services to help rewrite policies if needed. We're the subject matter experts, so we're able to help structure home sale programs to meet the business needs, but to also provide a great experience for the employees. So we can talk the client through how to manage that in their policies and make any changes if necessary.
And our client advisory team, Russ and the team, they do a really good job of keeping our clients informed using tools such as this benchmarking survey to let them know the trends that are happening, and really can give good advice on what to do about their policies and what's best for their culture. So we do really good support in that way.
We're doing that with the clients, but we're also doing that with the change makers. So I know that a lot of our change makers are also consulting with Russ and with the advisory board, and yeah, they're giving them great support. And I think I just noticed an email from one of our clients that was really mentioning Russ for the help that he gave them. So definitely, yeah, that's a huge resource to use. We're running out of time, but Cara, do you have any takeaways from this discussion? Anything that you want us to stay with in mind?
I do. I think number one, home sale is evolving, and as we talked about, there's a lot of different challenges that we have today, new challenges that'll come up tomorrow, and there's still the ongoing impact. Waiting to see what impact NAR, the NAR settlement, will have. And I think that mobility teams really need to be able to adapt to these changes, and to just be sure that the employee is receiving the support that they need throughout the process, but also balancing that with your responsibilities, your fiscal and tax corporate responsibilities as well, and just being able to provide a really good home sale solution as Benivo does, and ensuring these companies have that structure and the compliance and the advisory team and options that we have as well.
Heather, a few last words from you.
I think the most important thing is that Benivo has a lot of support available to help with home sale programs, not just with developing your home sale program or adjusting it, but also with your relocating employees. So if you have any questions or concerns, you can always reach out to us.
I know I learned so much today, and I'm really appreciative of this. You've been you have so much experience and so much information. I hope, I say thank you, Robert, and I think Rob, I think everyone learned so much from you, and for everyone who was not familiar with the whole notion of home sale in America until today, I think we learned so much and we know a lot. So all that is left now is to invite back to the stage our wonderful guests. So I'm going to call Marife Alvarez. Marife, thank you so much. And I'm going to see you soon in the quarterly meeting. And I'm going to invite Julia, who just landed and came back to us. Did you have time to unpack a few suitcases during the show? Or were you glued to the screen like me?
Yeah, I was hooked on everything. It was such an entertaining thing. And Marifa's wonderful charity, and it's very impressive. Learned so much today.
Thank you. Mm-hmm.
And last but not least, I want to invite Michelle Curan, my colleague, who was so helpful today with running this show. I was at the front instead of the back and needed your support. So all that is left now is to thank you, our audience, for being wonderful as always, and to remind everyone to join us again next week, where we're going to meet Diogo Matos from Solvay to talk about transformations and what happened in Solvay. And this is a really, really interesting story to tell. So we're looking forward to seeing all of you next week. And thank you for joining us, and have a lovely, lovely week. And our praise and our hearts are with Brian. And next week, I hope he's going to be in this seat back. Thank you, everyone.
Thank
Bye.
you.